He hated it. He didn't trust the media. Where Kerry was good at, and become very wealthy because Kerry was passionate. Is that true? Yeah. Kerry loved TV. That was his passion. He loved farms and having a lot of, that $500 million worth of farms. He loved that as well. So he did have passion, and that's what drove him. Okay? Where Jamie didn't have that. So Jamie simply flogged it, sold it. Sold Channel 9, sold the works, got good money, sold out top of the market. No passion there. But guess what he did? Where did he invest most of the money? In casinos. Okay? His dad didn't like investing in casinos. His dad liked to gamble at casinos. Okay? But Jamie had seen how much money Kerry had lost at casinos and just assumed the casinos were a cash cow. And because they were in Crown Casino and Burswood and stuff like that, which were cash cows, he just assumed he couldn't go wrong. But his primary focus is to make money. There's not a lot of joy in that if there's not a higher purpose. If you've already got $7 billion, really, just the sake of making more money, really doesn't mean a lot. You need to have a purpose behind what you do. Okay, no matter how much money you've got, otherwise it'll ruin your life. And as a result, he went and invested in casinos. And I don't think much of casinos. Casinos are a danger to society. Other than some light entertainment, they are actually really shouldn't exist. Bottom line. Most casinos, if you look at where their profit comes from gambling addicts. And guess where gambling addicts get their money from? They steal it. Most of the profits in casinos are stolen money. So they're actually partnering with criminals effectively. Okay, so is that adding value to society? Is that helping? No. Of course he's going to feel bloody depressed because you're not making a positive impact in the world. And money has energy. So if you don't use it in the right way, it's not going to make you happy. But if you use it in the right way and adding and using it as a positive energy force, money can be, jot this down, money can be a powerful tool to serve. Is that an empowering belief system, yes or no? Instead of some people have a belief system, money's the root of all evil. And imagine if you had a belief system, money is a powerful tool to serve. It's obvious who's going to be more financially successful and also who's going to add more value to society. See, I changed my belief system many years ago to money is a powerful tool to serve. Therefore, I am naturally motivated to do well financially. I don't have to push or force myself. I'm naturally motivated because I know the more money I have, the more abundance I have, the more ability I have to make a difference in the world. Okay? And I realize that's important. So I'm driven to that. So because it's an empowering belief system. So there's a lot of lessons by studying different people, what you can learn off them. Most people are an example of how to live in some areas and a warning in others. And if we looked at our own life, would that be true? You could probably say, Jamie, that's probably right. In some areas, I'm an example. Okay? I might be a great mum or a great dad. In other areas, you might be bloody hopeless. Okay? You might say, my health is crap. I eat like a pig. I don't exercise. And that part of area is not working. Okay? Or it might be, you're so super healthy, but your finances are a disaster. Okay? Everyone's has this different areas. Where we're usually strong is an area where we're usually focused on. True? We've focused on it and we've mastered it. And what you're doing here is you're learning how to master finances and life at the same time. And by putting the focus on it, you'll see your results improve over time. So we follow through, go through the learning experience. It's not all rosy. Some of you will fall over. Is it true? You get out there and you'll lose some money. Oh, make something clear here. If you're going to become an investor, guess what? At some point, you'll lose money. Jamie, I was just motivated until now. Now you're depressing the shit out of me. But it's true. It's how you deal with losses is very important. It's just part of the psychology. I know we want to bitch and moan, but sometimes I've lost money. Still happens at times. You can't guarantee that you're always going to win, but if you wanted to expect to win all the time, you wouldn't play the game. You only have to win more times. Richard Branson has failed. You hear he's the only entrepreneur on the planet that's built 8 separate billion-dollar companies. I think I was telling you about this the other day. That's massive success. Would you agree? Most of you go, just give me one of those suckers, okay? 8 separate billion-dollar companies in separate industries. But the reality is Richard Branson's had more failures in business than all of us combined in here. That's how he got so successful. Out of his hundreds and hundreds of virgin companies, some of them have failed spectacularly. And the critics have a go at him, etc., but really, does it matter? He's loving what he's doing. He adds value. He makes a difference. And he has an absolute blast. And he's successful more times than he loses. Same with trading. You're not going to win all the time. Ask David when he's talking about E-minis. He's had massive successes, but at times he's lost money. But then we just get smarter how to minimize those losses and maximize our gains. And that's the whole key to it. So my point to the story very quickly is, so anyhow, after meeting this gentleman, I must have planted the seed, and I thought, okay, well, let's see if I want to ever create that sort of wealth. I'd only ever go about creating that wealth if it never really interfered with my lifestyle. Because I'm not going to pursue wealth just for the sake of pursuing wealth, because that's not what I'm about. But if it come about and I was able to do that and it fitted in what I wanted to do, yes, I'd be very open to that, becoming a billionaire at one point, okay, if I could use those resources for the greater good. So interesting, after that, I'd never met a billionaire up until then, and within the space of within a couple of years after that, I met over 6 billionaires personally, one-on-one. And I got the chance to learn off these people. So it's like when the student's ready, the teachers appear. Now, some of those people you'd know, like famous people like Richard Branson. Other people were generally private people you wouldn't know. Other people such as the richest man in Australia I was able to meet even recently, and just having conversations, the amount of things. Whenever I meet someone, I'm always looking for what's their psychology, what drives them, what motivates them, what are they excited about, because that will tell you a lot about someone. So that's what happened. So let me share with you how you would go about becoming a billionaire in case you wanted to, but how you could replicate that on a small scale. Let me use an example of a entrepreneur that made it and lost it. A gentleman by the name of Eddie Groves. Eddie Groves owned what company? Tell me. ABC Learning. And what business were they in? Childcare centres. So they were in childcare centres. And Eddie Groves built this company quite large. But let's look at how billionaires make their money. Okay? Eddie Groves is worth a couple $100 million at one point. I'm not sure how he's doing today, but not too well. So what they do, let's say, this is how it works. This is how a lot of money is made on the market, and this is what you participate in whether you know it or not. Let's say ABC was valued at one time, but ABC childcare centres were trading at, jot this down, 20 times. 20 times profit. What that means is that for every $1 million in profit they were making, they were valued at what? 20 million. So every $1 million in profit they were making, they were valued at 20 million. So if they were making $100 million in profit, or reported profit, and trading at 20 times, what would they be trading at? What would they be worth? 2 billion. Make sense? 100 million profit, 20 times 100 million is 2 billion. 2 billion is, jot this down, is what they call market cap, or market capitalization. So in the market, when you're out there investing, you'll hear commentators talking about the market capitalization of NAB, or the market cap of BHP, or then they'll talk about small caps and mid caps. And you're thinking, what the hell are they talking about? Small caps mean small capitalization, the smallest companies on the ASX. Mid caps are medium-sized companies. And large caps would be like the big banks and the top 20 companies, etc. The big, large institutional companies. Making sense? That's how they value up. Now, how many times a company's trading at depends on its industry and depends on the market. At the moment, most companies would be trading well less than that, okay, because the market sentiment is very low in comparison to what it used to be. And it depends on the sector. In dot-com days, there was companies that were trading 100, 200, 300 times. Not their profit, but their revenue. They weren't even making profit, but just their revenue. Why do you think Warren Buffett didn't want to touch them? Because fundamentally, they weren't worth that amount of money. But speculative, they were in the short term until the bubble was going to burst. So when you're investing, you might want to know what the company's trading at. Another name for that, jot that down, is PE ratio. You'll hear people talking about the PE ratio, price-earnings ratio. Okay? What's its price compared to its earnings? How many times its profit, effectively? Okay? Then you had your PE before tax, and EBITDA and EBIT and all that sort of stuff. So you hear all those language. The moral to the story here is that we look at this. So let's say ABC wanted to grow. Now here's the interesting thing. Eddie Groves said that he was actually happiest when he had only 38 childcare centres and he knew every staff member. He was quite well off. And that's when he was happiest. Because there's an interesting thing, you become too wealthy, your lifestyle can actually go backwards. Okay? Because too much pressure, too much responsibility can actually go backwards. He was happiest then. But the banks got to him and it's like, okay, let's list this thing, let's float this, an IPO, float ABC childcare centres and grow, because that's all the market wants to hear. If you're a shareholder in a company, you want it to grow, don't you? So your share price goes up. And there was easy money, easy credit, so I was throwing money at them. And ABC Childcare Centre went from 38 childcare centres to over 2,600 childcare centres around the world. That's taking a small baby to a massively large business through growth. And they borrowed a lot of money to do that. Okay? So, but imagine this is how much wealth was being created very rapidly. If you're trading at 20 times, you can go up and knock on the door of some local childcare centres. Let's say there's someone owns 5 local childcare centres. And their total profit of those 5 is, let's say it's $200,000 a year each they're making. And let's say those 5 childcare centres are making $1 million between them. And you go knock on their door or send an advisor out. They're making $1 million in profit, these 5 childcare centres. And how much, being a private business, how much could you buy that business for, do you think? 3, 4, 5 times, you think? Who thinks within under 5 times? Depending on the industry, you probably could. What that means, under 5 times its earnings. And what's a business value at? They'll go and say, how much money is it making? Well, these 5 childcare centres are making $1 million between them. In that market, it's probably worth 5 times. So it's a private company. It's only worth 5 times. Which means, how much would it cost? $5 million. So, Eddie Groves could send his advisors to go and buy these group of childcare centres for $5 million. Now, if other private childcare centres wanted to buy them out, and they're bidding, Eddie Groves can afford to pay more. He can outbid the others. Why? Because Eddie Groves knows once he buys those for $5 million, and now ABC, the ASX listed company, owns them and it's trading at 20 times, what is that business now worth? 20 times $1 million. It's now worth $20 million. So he pays $5 million for it. It's revalued at $20 million. Why? Because ABC Childcare Centre is trading at 20 times. Because that's what you, as an investor, is prepared to pay for it. You're a retail investor. So you've been trading ABC or other companies and that's what you're prepared to pay for it. Why? Because that's the stock price. If you want to buy, that's what you've been paying, 20 times. That's why. Because the market's paying that. So it's worth 20 times. That means this business he bought for $5 million is now worth $20 million. How much money has he just made on paper? $15 million. Raise your hand if you can start to see how entrepreneurs can make a lot of money very rapidly. Yeah. $15 million in that one transaction. Now, the banks were saying to you, go and buy thousands of these. And he's like, grow. And he can outbid everyone else, remember? Because the local other private childcare centres can't afford to pay $5 million. They can only afford $2 or $3 million because they're only private. So he can outbid them and he can buy as many. And often he paid too much for them. But they just grow because the bank's saying, here's the money, we'll give you whatever you want. Just go and buy thousands of them. That's exactly what he did. Could be fun being an entrepreneur. Egos getting bigger. You got this company that's just growing. But it's loaded with debt. Okay, which is the danger when the credit crisis hit. Making sense? Does that sound pretty cool? That's how entrepreneurs make a lot of money. That's why they will list their companies. So if you study all the most successful entrepreneurs, okay, who's the richest person on the planet? Tell me. Used to be Warren Buffett, but invested in GM. Who is it? Bill Gates. Now, what makes Bill Gates a multi-billionaire? Tell me, specifically, what makes him a multi-billionaire? Yeah, he owns stock in Microsoft. Does that make sense? Sure, you could say, yeah, he owns a lot of money. That's why he's a billionaire. No, income is rarely not going to make you a billionaire. He owns a percentage of Microsoft. So that company started off small. They listed it on the stock market years ago, and it's growing. The share price has grown. So the percentage he owns, which I forget what it is, it's less than 20% or something, and is worth billions and billions of dollars. So if you study nearly every billionaire, what you're going to find is a common denominator. They have built a business, and they have sold the whole lot or part of it or they've listed it on the stock market. Every billionaire I've met, except every billionaire that I know of has done it that way, except one. There's a guy, Malaysian-born Australian, lives in Sydney, made $1 billion from one stock market trade, one single stock market trade, a couple of years ago. He invested in a stock, Australian company invested in. It was worth, I'm trying to remember the exact price, it was worth, I think he bought it when it was around about 5 cents, and that stock went to $13 at one point before the credit crisis. Can anyone guess what stock I'm talking about? Fortescue Metals. He put $1 million into Fortescue Metals some years back. So he had a decent amount of money to invest. $1 million, and his stock value when Fortescue hit $13, he was worth $1 billion. Who'd like a trade like that? Yeah, I was at this seminar, I found out about this trade, I went out and did it, and now I'm a billionaire. Okay? So that's the only billionaire that I know, and he was only a billionaire for a little while because the stock price come back down, but he still would be worth, 300 or 400 million. So it's still a good trade. The point is that, loser, down to his last 300 million. His wife's about to leave him. So the point is that that's the only, other than maybe Warren Buffett, but Warren Buffett's really a builder of businesses as well. He buys whole businesses, puts his management in and grows them. That's actually done it just from investing. Most of them build a business or buy a business and then resell it at a profit. Okay? When you looking at the Maya float, private equity firm, bought that a few years ago, refloat it, make $1.5 billion. Okay? That's making money at the big area, financial engineering. Okay? So that's how most of them do it. They'll build a business or buy a business, and they either sell it, like look at Richard Branson. He put Godfrey put a business plan on a napkin to him about Virgin Blue to start a Virgin airline in Australia. Richard wasn't really interested, eventually got him interested, and Richard said, okay, here's the deal, I'll give you $10 million to start it. So he took $10 million risk to start that. That was back in late September 2001, I believe, Virgin Blue started. Talk about prepared for opportunity, which company went bust shortly thereafter. Ansett went bust, Virgin had just started, and Virgin were offered a large amount of money. He'd put in $10 million, I don't know the exact amount, but Singapore Airlines had offered him a ridiculous check, I think it was 100, 200 million, for them basically to shut down. They wanted to take Virgin to shut it down because they didn't want competition out here. I think they also knew Ansett was going under where Richard Branson didn't. And Richard decided in a press conference to tell them no, he wasn't interested because he had their check there. He went public and said, I'm not interested, okay? But that was tempting. He could have turned $10 million into $100 odd million fairly quickly, but he didn't. And he had a $10 million stake, $10 million outlay. He made $1 billion out of that transaction. Virgin Blue was listed many years later. He made $1 billion, cashed out, kept some in, and once again, the share price has gone back down again. He still owns it. He can make that money again and again. A lot of people, I know a successful publisher, and he owns publishing companies, and in Melbourne, quite a wealthy guy. All he's done is this. He built a publishing company, sold it, okay? The people that bought it usually have no idea what they're doing, run it into the ground, buys it back off the liquidators for nothing, virtually, build it up a second time, sold it again, took a couple of years holiday, wait till they wreck it, goes back in, buys it cheaply, he's built it up for the third time, he's about to sell it again. That is a very common strategy, building up a business, letting other people take it over and wreck it, and then buying it back again. As Kerry Packer said, you usually only get one Alan Bond in your lifetime. Okay? Alan Bond paid him a ridiculous amount of money for Channel 9. Alan Bond then went broke shortly after, and he still owed money to Kerry Packer. Kerry Packer got $1 billion for it and took it back for $100 million, which was owed, so it cost him nothing to get it back. And then he got the business again and had already made $1 billion out of it. So that's what can happen in business. So that's the way, very simply, is that people become billionaires as a result of that. Clive Palmer, a Queenslander, is about to become the richest man in Australia. But once again, he's been able to build it. He's about to list one of his companies on the Hong Kong Stock Exchange and expect to get about an $8 to $10 billion valuation, and he owns half of it on top of his existing wealth. He earns, I believe, about $400 million a year in royalties. Gina Reinhardt earns hundreds and hundreds of millions of dollars a year in iron ore royalties. So a lot of money to be made, obviously, in commodities. Is this making sense to everyone? Now, why I share that with you, one, it's curious to know. Two, you're an investor. You're paying the retail prices. So make sure when you're buying a company, third criteria of Warren Buffett, is it undervalued? Because you don't want to be paying too much for it. At 20 times, ABC was overvalued. Okay? But well before that, it might have been undervalued. Okay, so you want to make sure you're not paying too much for a company. If it's trading too high, you go, nah, let's move on and look for the bargains. There is bargains in the stock market at all times. Okay, particularly in the credit crisis. It's just, I was talking to Justin just after you finished. It's quite funny because people don't follow this. It's like, he said, the best time to get in the market, which was March this year, if you timed it perfectly, March this year when the market turned around, bottom, it's gone up 50-odd% since then. He said he could only get 8 people to a seminar to listen to what he had to offer. 8 people. He said, what the crazy thing is, that was the best time ever to be doing this leverage into hill. I got in then and got a lot in, and even before that and a bit afterwards, because I knew it was a great time. He said, but the problem is, at the height 2 years before, he said he had 1,000 people at his seminar. Couldn't handle the business. Everyone wanting to sign up to get in the stock market at the peak of 2007. He said in March this year, he could only get 8 people to the seminar. Okay? Yet that was the time to be going in big time. Okay? Why the market's still down to what it can go to, but you see that because most people are scared. They won't do anything. And that's why the share price is so low. And that's why the ones that are able to have a strong psychology and know what they're doing can go and do very well. Okay, so isn't it interesting? You know, what will happen is that when the taxi drivers start quitting their jobs from share trading or property investing, that's when you get out of the markets. Okay, that's when you know things are about to hit the fan. When everyone gets on the game. Okay, smart investors wait. When no one wants to get in the game, that's when you look for opportunity. Because fear is keeping everyone out. That's where you have a strong psychology. You're not fearful. Not being stupid, but you look for the bargains. Okay, so that's pretty much how... Now, how do you replicate this on a smaller scale? Well, one of our members, 21st century member, he was sitting in the front row many years ago on a seminar. He was 19 years of age when he first did the seminar. And great, he's there with his girlfriend. And great young couple. And he ended up doing a similar thing where he ended up making a large amount of money. He did it with a business partner of mine, one of my former CEOs. And what they did was they started some internet businesses. Okay? So how do you replicate this? This is one way. They had a couple of internet businesses each that were doing really well. We're getting up to making like $100 grand a month. So they got a group of them together, 4 partners that had all individual